let's bring on board Kunal and Sunil sir, who are joining us right now. Kunal, once again, we'll come to you first and talk to us about something that you had told us at the start of the day, and that has panned out like Shrishti mentioned. You did say that investors would buy the dip, and we have seen significant recovery. At least we've seen recovery on the index, and the broader market has been a whole different story today.
Absolutely, Srishti. Sneh and Srishti, yes, we flagged off in the morning that 24,850 thereabouts is a very important support. I think we managed to make a low almost precisely at the 24,850 mark on the index. And post that, we've seen a very good recovery. So after being down almost 300 odd points at one point of time, I think it's good to see that the markets have recovered and come back to I would say quite a flattish territory for itself. Now, today's highlight is more in the market breadth, and especially at the start of the day. Especially, I think the mid-cap index was flat to just about flattish when the index was down 0.5% to 1%. That itself was a very strong indicator that not all stocks are showing signs of buckling down after this kind of a gap down opening. So, which means that we are looking at a point where the markets would eventually want to digest all of this negative news flow surrounding, and we may see a breakout on the upside. So I still stand by with what I discussed in the morning, that this is a dip which one should be looking to buy into, especially given the fact that the markets are still showing signs of robust price action on individual stocks. You look at the volumes across individual stocks which are seeing good price movement, and that is also a very strong indicator that we are not seeing a very low volume kind of a buying. You're seeing a very high volume kind of buying for individual stocks. So that's also another indicator to watch out for. Over the next couple of days, I would expect at least a retest back to that 25,050, 25,100 mark where we closed on Friday.
All right, so that's the day coming in on Nifty 50. One can still look on to buy the dips when it comes to the index. And yes, of course, a decent recovery, what we are seeing on the banking index as well. But Sunil, share your thoughts on the once again rise in the geopolitical tensions and its implication on the markets, especially the Indian markets, because Sunil, we have of late seen that the markets do climb the wall of worry, and we have seen so many instances, especially in the past 2 years.
I think that's due to the strength of domestic liquidity. I think if you look at the numbers for the mutual fund industry, for example, flows have been consistent, and gross flows, I think net flows were just below 20,000 last month. But if you see the gross flows, they've been stable at around 55,000 crores. So I think that in the SIP book coming into about 26,000 crores means that fund managers have got adequate liquidity. But the nature of that liquidity is a little more tilted towards mid and small caps. That's why you've been seeing that consistently when global events have been happening, FIs have tended to get nervous, especially this time because of the oil spike. They have tended to pull money out from the market, but domestic fund managers with ample liquidity have stepped in. And what reinforces this is the fact that the domestic economy is chugging along well. Today, the HSBC PMI index numbers have come in. Both the manufacturing and the services PMI are trading above 60, and the composite PMI is a 14-month high of 58. So the domestic economic news is good. Domestic liquidity is strong. So FIs will be nervous because they apprehended that Iran would do something about the Hormuz Strait, and they expected oil to shoot up. But as we saw during the course of the day, oil was fairly stable, only hitting about 76. So I think that there is enough supply. Though 20% of the world's oil goes through the Hormuz Strait, Iran's oil that also goes through. If Iran is going to sustain the war, they can't shut their own ships from going. So I think to some extent, there was a little bit of a knee-jerk reaction to that. Oil may still trend higher based on what Iran does. But I think that FIS nervousness related to oil to India is driven by the 85% import that we have of our oil requirements and the fact that the currency will tend to weaken, making all our imports more expensive. So I think this is something that foreigners, when they look at it as a comparative play among various countries, right, they feel that, India, they can take money off the table. But domestic liquidity, as even this month, has been fairly strong. I think it's more than 60,000 crores of buying just by mutual funds. That's the reason that every such dip is viewed as a buying point. And these fund managers had their liquidity building up over the last 2 months, because while the earnings season was in progress, they were not fully deploying. So they were all at the end of May, they were sitting on pretty decent amounts of cash. And I think that has come through to the market this month. So I think that situation will continue. You will see volatility in the market because geopolitics obviously creates nervousness in foreign investors. But I think domestic fund managers are tracking individual sectors and stocks. And when they see the FIS ceiling brings down those values closer to the average, Indian markets are not cheap still. We are still trading at a fairly, rich premium, I would say, to other emerging markets, and maybe at a nifty PE of 21, we are about just about the long-term average. So we are not cheap yet. But fund managers are tracking sectors, and when they see dips in certain sectors because of the selling, they will step in to buy. So I see a period of consolidation in the market, but there won't be a deep fall because there's enough liquidity to support any stock price which corrects sharply. There will be buyers in the domestic scenario.
Appreciate that view, Sunil sir. Let's slip into a very short break on that note. But before we do that, let's take you a little away from markets and tell you what's happening in the world of politics right now. Numbers are trickling in for bipole elections in 5 assembly seats. Remember, voting took place on the 19th of June for 2 seats in Gujarat and 1 seat each in Punjab, Kerala and West Bengal. So far, Congress-led UDF has been confirmed to clinch the Nilambur constituency, which falls under Wayanad in Kerala. BJP is leading in Gujarat's Kadi constituency, while Aam Aadmi Party is leading in Visawadar. In West Bengal, TMC is currently leading the race in Kaliganj constituency, whereas AAP is surging ahead in Punjab's West Ludhiana constituency. But on that note, we'll slip into a very short break and be right back on the other side to discuss the last hour of the trade.